Hi, my name is Allan Madan. I'm a chartered accountant and a tax expert in the Mississauga and the Toronto regions of Ontario, Canada. The topic of today's short video is converting a sole proprietorship into a corporation. If you're a small business owner that's unincorporated and you're planning on forming a corporation soon, it's really important that you watch this video. I'm going to tell you everything that you need to know from a tax perspective. This video is broken down into 5 small parts. The first part is, why should you change into a corporation in the first place? There's 3 main reasons. Number 1, a corporation provides you with limited liability protection. What that means is that if you are sued, then the only assets that are at risk in the lawsuit are the corporation's assets, not your personal assets. On the other hand, if you're a sole proprietorship, meaning you're not incorporated and you are sued, your personal assets are at risk as well as the business assets. So you could lose your home, your car, your investments, and so forth. That's something that you want to avoid altogether. The second reason for changing into a corporation is because the tax rate for a corporation is lower than the tax rate for an individual. The corporate tax rate, combined provincial and federal, in the province of Ontario is only 15.5% for the first $500,000 of business profits. Business income at the individual level is taxed at your marginal tax rates. The marginal tax rate at the top bracket in the province of Ontario is 46.4%. So you can see that you will save approximately 31% if you incorporate. That's 31% in taxes on your business income. The third reason for changing to a corporation is because with a corporation, it's a lot easier to split business income with your family members through the use of dividends. The second topic that I'm going to discuss is, how do you close your sole proprietorship if you have one right now? Well, you have to do 2 things. Number 1, you need to cancel your business registration with the Ontario Ministry of Government Services. If you live in another province, contact your provincial Ministry of Government Services. Similar procedures will apply. The second thing you need to do is contact the Canada Revenue Agency. Cancel your business number, HST number, and payroll number if you have them with the Canada Revenue Agency. You should be able to do that over the phone. The third main topic is, what assets are transferred from a proprietorship to a corporation when you form your new corporation? Well, there's 2 categories of assets. The first category is physical assets. Examples include equipment, computers, vehicles, furniture, and so forth. The second category is intangible assets. Now, you may not think about it, but one of your biggest assets for your business is an intangible asset, and that's goodwill. Goodwill, by definition, is what someone would pay for your business over and above the cost of or price of the physical assets. The fourth topic is the Section 85 rollover. Now, it's really important that you pay close attention to this part because it's going to save you a lot of money. When you are transferring assets from your proprietorship to your corporation, you should do so only under the provision of Section 85 of the Income Tax Act. You have to do that, and you have to file the related Section 85 rollover forms. By doing so, you will not have to pay any tax on the sale of your assets, both physical and intangible, from your sole proprietorship to your corporation. Now, if you don't file a Section 85 rollover because you didn't know, or because you just didn't want to go through the tough exercise of doing so, you're in for a surprise. What will end up happening is that the CRA will reassess the transaction and bump up the sale price to the fair market value of the assets. So let's take an example. If the assets that you own, including goodwill, are $100,000, and you paid only $30,000 for them, then the CRA will impose capital gains tax on the gain of $70,000. That only happens if you did not file an election pursuant to Section 85 of the Income Tax Act to transfer your assets from your sole proprietorship to your corporation. The fifth topic that I'm going to talk about, and this is the last topic, is pitfalls to avoid on incorporating. These pitfalls have come from the mistakes I've seen others make, and I'm going to share them with you. The first main pitfall or mistake that I've seen people make is that they sell their assets for only $1. They sell their business assets, that is, for only $1 to their corporation. Now, if you're willing to sell your business assets to $1 for me, I'd surely buy them. So the CRA doesn't like this, and what they'll do is they'll reassess the sale price from $1 to the fair market value. That's what a third party would pay. As a result, you end up paying capital gains tax on the difference between the fair market value of the assets transferred and what you paid for them. The second major mistake that I've seen people make in my not in my practice, but throughout my career, is that they gift assets to the corporation that they just formed. What that means is that they are transferring the assets from their sole proprietorship to their corporation without receiving any consideration like money or shares in exchange for the transfer. If you do that, once again, the CRA will step in, reassess the sale price from $0 to what the fair market value of the assets are, and you will end up paying capital gains tax on the difference between the fair market value of the assets transferred and what you paid for them. I hope you found this short video useful. If you want really great free tax tips, make sure you go to my website, madanca.com. The URL is shown at the bottom of this video, and you'll make yourself a lot wealthier. Thanks for watching, and talk to you next time.